Welcome back. My name is Arya, and I don't waste your time, so let's get straight into it. I'm in a very fortunate position to say that at the age of 20, I have a portfolio that is worth $137,000. And contrary to the sort of theories that were floating around in the Discord that I come from oil money and this and that, perhaps to a degree stereotypical, given my ethnic background, but none of these things are true. I've made every single dollar of this portfolio. I was the reason for saving all this money and investing it and making gains on those investments and so on and so forth. And so in today's video, I kind of want to do a bit of a review on that because recently we've had a lot of people, discovering the YouTube channel, and we've seen a solid amount of growth in particularly the last 10 days or so. So welcome to all those people. And so perhaps this video can serve as a bit of an intro to who I am and the general type of investing I like to do, a little bit about my history, my very big winners, as you'll see in a second here, but also some very pronounced losers, namely Pfizer, which recently happened that I completely blew 6,000 on. So, I mean, that should be fun to kind of take a look at in a second here as well. And so I guess a good place for us to start is for me to actually show you the current state of the portfolio, which I'm doing on Fiscal AI, by the way. And I get a lot of comments about this, by the way, but stuff like this is free. So you could click the link in the description down below, 2-week free trial, no card required, all that great stuff. But also like this portfolio dashboard, everything like that, this is all a free feature. So you can, take advantage of this as long as you have a valid email address. Click the link in the bio, make an account, and you can be able to, put your portfolio in here, have it on like a nice little pie chart, stuff like that. I should mention the video is sponsored by Fiscal. It's the only sponsorship I take on the channel, and there's a very good reason for that. It's a wonderful, wonderful product, and so you guys should definitely check it out. But anyways, more in terms of the portfolio, this is the current state of it. These are the different holdings that I have. It's a generally concentrated portfolio of assets. I typically try to kind of look for high quality businesses, and I typically try to buy them when it's quite dislocated, when the market isn't really favoring those businesses. Clear standouts here is of course ASML, which I was able to really have like a good year where I was able to kind of pick up shares of that business. FICO, I very hastily picked up shares of that, I think in August of this year, when it had that little dip due to the Pulse guy on Twitter kind of tweeting. Amazon, I've just had that forever. Uber, I bought that last year during the whole AV fears in like the $60 range. And then now, of course, if you've been following the channel recently, I did open a pretty sizable Adobe position recently. All of it driven through sales of Google. And I'm waiting on earnings next week, by the way, to kind of maybe make a decision as to whether I'm going to add to that. Hopefully we get a bit of a drop on earnings. Hopefully we kind of visit that $300 range, maybe even a little bit lower, and I would be very happy to continue adding to that position. And so, yeah, that's the current state of the portfolio. And more in terms of, okay, Arya, how did you, at the age of 20, like this is a pretty sizable amount of money to kind of put together towards a portfolio. And it all comes through a mixture of the majority of it. The majority of it comes through a mixture of this HVAC sales job that I had between the ages of like 17 to 19-ish. And so we'll get to that in a second. And then a good portion of it, as I'll show you here as well, actually did come from market gains. Prior to making this video, I actually did a very quick spreadsheet with some of the averages of the stocks and stuff like that. A good 50,000 of it has come from market gains, which I actually did not realize, but yeah, we are up quite big on that. More in terms of how did I get the initial base of money to kind of start investing, I would say 50 to maybe, and I don't have exact numbers on this, but maybe in the ballpark of 50, 60,000, maybe a little bit more than that, did come from this HVAC sales job that I had between, like first year university and second year university, like thereabouts, 17 to 19-ish, give or take. And it's just a very regular run-of-the-mill sort of HVAC job, like nothing really special. It's just any other like sort of blue-collar work. The one big key differentiator and the reason why I was able to save so much is the fact that, I'm pretty young and I don't have to pay for rent. I live at home. Thanks, mom and dad. I generally don't have any sort of expenses. I don't have a car payment that I have to keep up with. I don't have insurance for that car. For most of those months, during those 2 years, I was pretty much keeping my expenses under like $1,000 a month, and it was all like discretionary spending. It was buying clothes occasionally. It was buying food when I'm at university. Chipotle, of course, being like a major sort of expense, which I don't regret. I absolutely love Chipotle, but that was sort of the general expenses that I had. And you keep your expenses pretty low, and you're making definitely north of that, north of like 5,000 a month, whatever the case may be, or thereabouts. And so I was sustainably able to save a lot of that money and put it towards investments. And it was like it wasn't necessarily like a full-time job, right? Give or take 20-ish hours a week of work. And then prior to that, I talked about this extensively on the channel before as well, or during interviews, where I did used to work in some restaurants, so I had a little bit of money initially saved up from that. When I started investing in, I think it was November of 2021, I want to say, or October of 2021, the initial sort of couple $1,000s that I put away was from those restaurant jobs, a little bit of money that I'd saved up, like birthday money, and of course you have some sort of savings, right? So I kind of used all of that to initially get the jump start in terms of my portfolio. But overall, basically all the money is just garnered from that HVAC sales job, and of course kind of the market gains that came afterwards. There is some miscellaneous stuff I'm missing in here as well, so of course this whole YouTube thing that I have going on now, this is starting to make a decent amount of money as well. The fiscal affiliate link, thanks to you guys to who do subscribe, that provides a decent amount of revenue, but total it's not much more than a couple thousand, right? And so again, like this isn't some super sophisticated breakdown of every trade I've ever made. To tell you the truth, I would say for the first year or year and a half of me investing, on top of it being, less than $10,000, but I have no idea what I even did, because I was trading in and out of companies just purely based off earnings. Again, I've talked about this particularly on podcasts and interviews of other people, but I was just making so many stupid beginner mistakes. I was buying Tesla on earnings. The Netflix quarter, the quarter where they reported the subscriber loss, I gambled on those earnings. Granted, it was only 2 shares, but still, that, like, at the time, dude, like that's $1,000 or whatever that I put into the stock, and I immediately see it, like 20% of that evaporate. And I sold it the next day or whatever the case may be. I sold it the next week. I have no idea what I did. Point is, I was gambling on a lot of earnings. I would be buying like AMD, selling a week later, making like $200. And so I have no idea what I even really did, to be honest with you. Quick note on Tesla, by the way, I sold at a slight profit after like a year of holding it. So before you guys jump at me for at any point in the future hating on Tesla because I lost money on it. No, I didn't. But yeah, so anyways, in the relevant history of me on YouTube and, doing this, give or take roughly the past year, this is sort of like the general trades that I've made and the general investments that I've made. There is like a Paycom gain that I didn't include in here. There's a couple like LVMH. If you go super far back into my videos, like I used to own like LVMH, I made a decent amount of money on that. Ulta Beauty, I made some money on that. Couple other stocks that, again, I'm blanking on. I did lose a little bit of money on, what's the name, Starbucks, but I'm just calling all of that like roughly even, because I made money on some of them. I lost 10-20% on some of the other ones. So roughly even if we net everything out. And so this is kind of generally the trades that I've made. At the top here, these are the realized gains. And again, not super sophisticated. And I've rounded the shares here. So again, a little bit of inaccuracy total, but this is the general idea of it. We've had some small-ish sort of gainers, particularly with, like Salesforce and MasterCard. I made decent money on those, but nothing, particularly outstanding. The big gainer, of course, in the portfolio was the Google position, which I had 84 shares of. I had an average of 157 per share, and I recently sold in 3 tranches at $295, which registered a $16,000 Canadian dollar gain. So that's been absolutely massive. HIMS, we did very good for being, like a $2,000 position to begin with, making 1,000 on that, roughly 50-ish%. That was absolutely fantastic. And then more in terms of the unrealized gains, right? So Amazon continues to be like a massive winner for me. I plan on holding that at the moment. I have no sort of ambitions unless it gets like super expensive, similar to Google. But even then, I'm hesitant to kind of let go of that business, given it's my longest held business. I've never sold a share yet. That's kind of the only stock that I'm a little bit more emotionally like married to. I feel like it would be a disservice to sell it. You know what I mean? And perhaps that's the wrong way of thinking about things and thinking about your investments. You should, think about them in terms of whether this is, on an ongoing basis going to be a business that should be in your portfolio. But anyways, it's a solid business. I have, at the moment, no real reasons to be selling it. Uber has done quite nicely for us, $5,000 of gains on that. Adobe at the moment is unrealized down about $1,000, but I have absolutely no worries. I, in fact, invite a further dip into the business because I'm planning on buying more of it. ASML is another monster gainer for me. I'm up $10,000 on that position, and at cost basis, I think it was like I want to say like a 17-18% of my portfolio. So, you compare this, the gains of this to Amazon, for example, right? Dollar terms, the gains on both of these are quite similar, but of course, ASML as a percentage of the portfolio was much less. And even today, if we take a look at it, it is my second biggest position, but it's still, like noticeably smaller, right? 21% versus 27. So it's quite a ways away. FICO, very recent addition, small position, but it's up, what is it, 30%. And so that's kind of doing nicely as well. TMDX, speculative position, up like 50% on it. So this one's been doing fantastic as well. It's doing what it's supposed to do. And then the Pfizer disaster. So I did include that in the total returns here. But in terms of the shares, because if you recall, I did sell the shares to buy into a leap, and then unfortunately they almost committed fraud, and the shares are down massively since that point. So I registered roughly a $2,000 loss in terms of the just holding the common shares, and then in terms of the leap, I did buy it at like roughly 3,900, and then today that leap is worth about 500, which I'm still holding, by the way. Just it is a leap at the end of the day. Like my thinking with that, by the way, at this point is I'm kind of at this point I'm risking $500 with the potential of, if we get even like a 10, 20, 30% rally. At this point, I have until January 2027 where it expires, right? So I think it's just probably best to kind of hold on to that in hopes of a relief rally. And, you know, if it dies, then it dies, right? Like it's a $500 position at this point, meaningless relative to the entire size of the portfolio. It's a 0.5% position in the grand scheme of things, right? So that's the situation there. And total, including all these things, and again, this is not all of my trades, this is not everything included, so there is a degree of inaccuracy, but I would estimate with like, you know, 90% accuracy, this is roughly how much I've made just purely off of market gains. And, you know, of course, I am doing this video to an extent of like kind of showcasing this pretty incredible achievement, in all honesty, that I've done over the past couple of years. Having roughly 100,000 USD portfolio at this age is quite remarkable. I'm quite proud of myself and everything like that. But perhaps some of you watching this could take it as inspiration. Maybe if you're younger than me, maybe if you're older than me, it doesn't matter. I think the biggest takeaway from this is that within a couple of years, you know, with pretty dedicated saving practices, and granted, my situation is very fortunate to begin with, right? Having to not pay for most of my living expenses is just absolutely fantastic. You could shovel a whole bunch of your money into the portfolio. So that's, yes, I understand, you know, some of you watching maybe have kids and stuff like that, and a lot more life expenses. The point is, in a pretty short period of time, if you dedicate your life, if you dedicate towards putting money away and make smart investment decisions and be able to buy into quality businesses, especially when they're undervalued, right? Like, sure, I worked for 50, 60K and I was able to put that away, but at the same time, I was able to turn around and make a lot more in terms of market gains on top of that money. And it starts to snowball at that point. There's a stat where it says, and I'm going to butcher this so badly, but there's a stat that says 100K is 25% of the way to $1 million, which intuitively, if you think about that, you're like, no, 100K is 10% of $1 million. But the thing behind that is, even at like a market return of like 7-8%, if you wait, I don't know, maybe is it 30, 40 years, something like that, that first 100K is 25% of the time until you get to $1 million, right? And so compounding, that's how it works. The 10% return, the 10% on a $10,000 portfolio is relatively small. The 10% on a 100K portfolio starts to add up. The 10% on a multi-100,000, maybe 500,000 portfolio, all of a sudden, that's a very significant amount of money. And again, if you're buying into quality businesses, particularly when they're dislocated, when they're undervalued, when the sentiment is bad on Twitter, when people are calling for AI to disrupt your business, if you can do the due diligence, if you could do the research, if you could get behind the numbers and understand the key drivers of that business, you can turn around and make pretty solid market returns on top of that hard-earned money. Granted, you might have a couple losers here and there. You might get a cheeky Pfizer somewhere in there, but it all comes down to position sizing and doing due diligence, and perhaps not being discouraged when you do have the losers, right? I definitely don't regret anything. I did a whole video on this actually, saying I don't regret anything and I don't regret losing that amount of money. I paid my tuition. I paid my tuition to the markets of making that mistake, and I know to not make that mistake in the future. I'm glad that the position sizing was only 6 or, roughly 6 to maybe 8%-ish, depending on what time you look, because obviously my portfolio keeps growing. And so it was a good lesson for me to learn, and I hope to keep this going, right? Anyways, with that being said, thank you very much for watching, and We're doing a Feed the Homeless thing, by the way. So if you subscribe to the Patreon, well, if you subscribe to the Discord using the Patreon, all the earnings that I have for that this month, by Christmas Day, I'm going to either call up a homeless shelter or just straight up feed the homeless wherever I see them. And obviously, you know, I'll provide receipts and like record it and everything like that. So if you want to contribute to that, it's not like you don't get anything in return. You do get access to the Discord. There's like close to 30 exclusive videos on there, community of like-minded investors. There's a Q&A that you can ask me questions. You get a direct line of, you know, chatting to me, whatever that's worth. So if you like, click the link for that. It's in the description as well. And you can contribute for this month to feeding the homeless. With that being said, thank you very much for watching and have a great day.